Hello there. I discovered that some of the guys in my community, especially the newbie, they find it difficult to draw their supply and demand zone. Sometimes, they were told that, okay, when you see the last bearish candle that form before they push, before the impulsive move, and this impulsive move carries fair value gap, that they should draw their zone around this bearish last bearish candle. In this case, when you are drawing a demand zone, like in this scenario, right? You have to draw the last. Okay, for context, let me change this color of this candlestick to 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 blue. You understand? Let me change these guys to blue. Just hold on. So let me change these guys to blue, right? So that you understand what I'm saying. So this is it. Let's change them to blue to shows that this market is actually going up. When you are going up, you want to be seeing a color that matches the condition, right? You don't want to see red. So this is it. So they were told that, okay, you have to use a refined order block, which is the last bearish candle that formed right after they push to the upside, right before they push to the upside, rather. You understand? So before they push to the upside, they were told that you should draw the last bearish candle. You understand? One of the things that comes together, there are things that come together to give you a strong demand zone or supply zone. First, you want to have a order block. Two, you want to have a fair value gap, right? So these are the things that comes together to make up your demand zone, right? Now, you are told to draw your zone around this first bearish candle that form, or the last bearish candle that form before the push to the upside start happening. Okay, but in some cases, majority of the time in the market, you may not even see a clean or order block like this guy. You understand? See the price coming down, boom, and this last bearish candle form. But sometimes you may not be present with this. You may not be given the opportunity to see a refined order block like this. You may not be presented with a refined order block like this guy. You will be presented with a clustered of order block like this candlestick. So some traders were like, okay, since this guy comes with a clustered range, we are not going to draw our demand zone there, that they should just leave it. And that is totally wrong. In this kind of scenario, for context again, please pardon me to change the color again to blue, right? Because we're actually talking about bullish, sorry, we're talking about bullish market. So this is it, guys. So you are expected, wait, let me change this one as well to red. So that is it, guys. You're expected to mark all these guys together. When the market refuses to give you a clean order block, like a refined order block, you're expected to capture the whole cluster of this spinning top and these small candles together as your demand zone. You understand? It works majority of the time. And if you go to our chart, I'm going to show you. So you are expected to mark this zone. Once price return to this zone, filling this fair value gap right here as your internal liquidity. Once the price return to this zone again, you're expected to start looking for buy opportunity with your preferred candlestick confirmation, right? You understand? So it is not only in this scenario, you must not always wait for a refined order block, because the market, you may not be lucky enough. The market will not give you that opportunity all the time to see a refined order block. So in such scenario, you can use a cluster of candlestick as your order block, right? Let's go to chart and I'll show you where this thing is happening live. You understand? Where this thing is happening live on your chart. So I'll show you a good example. Don't worry. let's go let's do until I find a good example, right? Sorry, I've not seen a nice example, but this thing actually exists. It exists, guys. It exists, right? It exists in the market. Okay, look at this guy. Look at this guy right here. You see that these guys have a series of candle, right? So you can mark all these series of candle as your demand. You understand? Let me reduce the opacity and change the color a little bit. Okay, let me reduce the opacity. So you can see in this scenario, we have this clustered of candlestick together. So you can mark all of them, mark all of them. So when price return, you can see the moment the price return, you see why are we taking this as our demand zone? Because we saw that price move aggressively from this zone with an imbalance. So when price return to this zone again, what do you see? The market move push to the upside with aggressive movement to the upside, right? So that's essentially how to do this thing. If you let's go to another pair like Euro USD. Euro USD produce this thing often and we can use it for our advantage. Let's use 1 hour time frame for instance. Okay, see this is a 1 hour time frame, right? So this 1 hour time frame. So this 1 hour time frame, you can see you see all this range here. You can mark all this range as your what demand zone. You see, you mark all this range as your demand zone. See, let me zoom in so I'll see it clearer. You can see this place, we know that these are demand zone because the price pushed aggressively from this zone to the upside, right? So, but it was not a clean order block. We see clustered of on candlesticks. So you can pull all these candlesticks together to form your base or your demand zone. And eventually, when price return to this place, you can see what happened. Boom, the market pushed to the upside. So that is how to do this thing. You may not be lucky enough to be seeing a refined order block at every interval in the market. You see, this is another example. Mark all of them together. You understand? In this case, it's even nice. It's only one. It has only one this thing, only one refined order block, which is fine. But you can still put all of them together as your zone, so that you have a good zone. You understand? To wait for price to react, to do its thing, right? You understand? So you can put all of them together to form your order block. You understand? So the example as you trade in the market, you'll be seeing this thing happening. You'll be seeing this thing happening. So in my next video, I will teach you guys how to use liquidity for your entry. We have, you can use fair value gap as your liquidity. You can use liquidity sitting in a range. So I will teach you guys how to use liquidity to even set your stop loss, to even set your take profit as well. So peace out for now. I'll see you in the next tutorial. Thank you.